All right, today's 25th of July, 2025, Crazy Revision with Kel, review the gold market. Now, one thing is that I know that in Cambodia, in Vietnam, in China, and Indonesia, in fact, a lot of people are trading gold right now. And the question is this, how high can gold go? So today, we will be talking about gold and a lot of things about gold. So stay tuned and listen up, yeah? Okay, now one thing to note is that let me bring it in right now. Give me a minute. Now, gold is a very interesting commodity. It is a defense against the US dollar. It's also a defense against market issue. But is it because the stock market has to really go down, then the gold will go up? No, you got it wrong if you say that. Actually, why gold will go up when the stock market is not doing well is actually because of the inner problem. Is that when the stock market is not doing well, a lot of people will dump the stocks, right? And when you dump the stocks as well, that means there will be dollar supply in the market. And when the dollar supply comes in, it get weak. All right, get weak, right? So what they do is that they will go into the mechanism and start to buy the price of gold to go bring it up. So the dollar and the gold start to balance up again. So that is the real reason why you have the stock market coming down. Then after that, people will buy gold, so-called, because the gold price goes up. The other thing is that when people are having the stock market going down, right? Okay, the people get panic and they need to repair, need to have some more money to pay for their bills or their margin calls. So there will be a point whereby the gold will be sold down first because this is the most lucrative assets. You sell away the gold, release the margin, and then bring it back to the stock market. Okay, so that's how things work for gold. Yeah. So there will always be these two things happening at the same time. Is that once the stock market starts to tank, the goal will also follow because of margin calls. But after a while later, then you will see the gold will form a base and recover because the Federal Reserve will come and save the day, will pump a lot of dollar, and then the gold price will shoot up again. So that's one you must take note of this, yeah. So don't buy just randomly say, oh, gold is going Dow Jones is going down, I just buy gold down. That's a very wrong thing to do. Okay, don't do that, yeah. Okay, so everyone take a look at this is the goal chart itself. Now I'm going to make it very simple for you. Okay, so this goal chart, basically I use this indicator called William percentage indicator. Now I'm actually considered a student of Larry William. Yeah, that was like more than about maybe 15, 18 years ago. And I really like his indicator called the William indicator. Very, very interesting if you know how to use it properly. Yeah. So you must know to use it with the trend of the market, then it'll be very important to you. Okay. So you can see right now, every time when the market is trending upwards, the William indicator itself, right, has its merits to be almost perfect. I'm not gonna lie about this, it's true. But it's not that you see the next day you just enter. That is very dangerous. You need to check the OP price. Okay, so to make it simple, my friends, look at this right now. I would love that gold price come down a bit more so that I can have another ride over here. And then if that happens itself, right, we can buy up into the market. Now, there are most of the time there will be instant rebound, but there are time whereby the market sell down first before rebound. So it's not going to be an all-in thing. You have to be careful on this. But nonetheless itself, right, you can see very clearly that every time the market hits a bottom here, all right, majority of it, right, is steadily going upwards. So it means that the goal potential to trade higher is very, very high. So this one, I share this with you. I don't go through this too many times. You may find me sickening, but the number I said was was 3682. Yeah, I believe that goal will be going to the high of 3682. Okay, this is my personal take in the market. All right, let's put this away right now and we see the bigger one, which is our indicator. Okay, so first of all, let's go into something a bit interesting. Okay, so this is the 5-minute chart, the 5% chart, all right, the 5%. So let's take a look on this whole schematic right now. Okay. So this is the 100%, this is the 95%, this is the 90%. So let's just go back and rewind the clock a little bit, yeah? When it hit the 100%, which is the highest ever at 3,500. Now you notice this, once it hit this highest level, it pulls back, right? And the market really goes down to the 90% mark. Now what is scary is this, we take this price, multiply by 5% at each level. This is where you get your 95, 90, your 85%, right? So the market really stopped at this point at 90th percent. Interesting. And then when it happened itself, it goes back up again, trades again, and so forth. All right. So the question is this: what is this blue line there then? This blue line is actually the 50% of the two difference, meaning this line is 92.5. Taking this guy multiplied by 92.5, you actually get something like this. Okay, got an idea now? All right, so now the thing is this, the upside, we also do the same thing. So this one here is 97.5%. And you can see that's where the market stop here, the market stop here, and yes, indeed, correct, stop here. So again and again, this proven to us that mathematics can actually wins the market as long as you know what to do. Okay, so the question will be, where would gold go? Now, gold has to go back up again to 3412 to find the upside momentum. And once that happens, then gold can go all the way up to 3,500. Now, if gold start to stop to sell instead for whatever reason, then the first support it has to maintain will be here at 32,325. Cannot be, sorry, my bad. On 30, oh, wait a minute. Let me push the thing away to the right side. Cannot really see. Let me clear this up first. 33.25. Yes. So which means that if the gold price is to fall, let's do it a bit better again. The upside here is 34.12. This one here is 32 to 33.25. Yeah. Okay. So that means that if gold is to come down, right, the support will be at 33.25. The upside itself will be 34.12. This is how I look at gold right now. So if gold do stay up, then gold will have to go up all the way to 34.12 and then bridge past it to go all the way to 3,500. If gold do come down, the support will be at 33.25, which has been a very strong common support level for the longest of time. Okay, got it? So that is for gold for the longer term, yeah? Now the other one is where we use our indicator, the Crazii charts, to see gold. This will get more interesting. Now we can see that every time when gold fell, right, the KCX will always be my favorite partner. So you see, so when the KCX itself is actually here at KCX at extremity, when the KCX hit extremity, you look up, you always see a red bar. It's impossible to see a yellow bar, yeah? So when you see a green blinking at the bottom, that's where you know that the market is near a base level. And that is where, as a trader, you can see that the market will form a base, and then after that, the rally. Okay? So now let's look back again over recently. There is another KCX, and then look up, it's a red bar, and then after that, you can see the market going up. Okay, so you get an idea now, yeah? So now everyone, let's take a look. Everyone, let's take a look at the chart right now. You can see here that although the market has pulled back on the gold, but we still don't have KCX here. We still have the KSI green. So what will likely be happening? Well, based on this one, we've seen this before. When the KSI is green but KCX is blank, right? Okay, then what happened? see this, and then we're going to go have the rally. All right, this is going to be happening because we have both indicator very, very bullish right now for us. Okay, very bullish for us. All right. So I still believe that gold will come down a bit more. And once that is done, you got itself supported, the next movement itself should be very, very strong. It could be $100 gain from where we are in the market. All right. So this one, please watch out for that. I think we can make some good money if you follow through. Yeah. Okay, so that will be for gold. So remember about gold, concentrate on the KCX. Now, one thing to note, only it's a downtrend. Now, when it's downtrend, right, I mean, you can see it's very clear it's downtrend, then the KCX will not work that well. But when it's bull market, the KCX work like a darling. Okay, so do note that which market are you handling using the KCX before you engage fire, yeah? All right, just before we go, I want to just show you the 5-minute chart that just now Dennis has brought in, and just talk about this before we end the session. Now, when you're trying to put the indicator in and you jam out like this, just don't touch it, right? Don't even touch it, yeah. Okay, so it's a very, very sideways market. All right, nowhere to really go around. So for us itself, we just have to stay tuned, wait for things to happen, then we trade. All right, so time check now is about 9 a.m. This Vietnam time, Indonesia time. Well, we are both there. As a matter of fact, now we can try to do a bit of pre-trading ahead of the GTH hour itself. Okay. All right, guys, that will be all for today's sharing. Thank you for listening to me. Thank you. I will see you more online shortly. Take care and have a great day. And may you make money from gold market. Bye bye. Thank you, Victor.